Kitco Mining special coverage of PDAC 2024 is brought to you by Gold Mining, Uranium Energy Corp, and Uranium Royalty Corp.
Is it better to be focused on precious metals or critical minerals? David D'Onofrio knows both sectors intimately. He helms White Gold, as well as he is CFO at PowerOne Investments, where they've made a number of investments in lithium projects. David, welcome back to Kitco.
Wonderful to be here. Nice to see you at 2024 PDAC.
Wonderful to see you here in Toronto, David. We've got through 2023. It wasn't the best year for resources. What are some of the key economic trends that you're looking for in 2024?
Yeah, that's quite the understatement. It was a tough year. Let's call a spade a spade. I think we're looking to see some continuity of what we saw in 2023 in some commodities, like the precious metals. I think we saw a nice base and value appreciation there. A lot of these critical minerals totally capitulated. There's different reasons, I think, why people speculate that might have happened, and we can chat about that. But I think it's a really interesting setup. If you're going to be positive and optimistic like we are, you can almost have the best of both worlds here, where you have this continuation of gold, silver, precious metal price increases, which I think there's a lot of reasons for that to continue happening, and now a rebound of some of these critical minerals, like the lithium, nickel, copper, etc. So I think we're setting up for an interesting year.
Talk about that capitulation. What happened to critical minerals?
I think a lot of it was, and you see this, things just get overdone, right? There was prices ran up really high. Let's take lithium, for example, went from, $12, $15, $20,000 per ton up to 70. And what that does, that brings a lot of high cost mines into the realm of, economic feasibility. And that brought on a lot of this extra product into the market, and it just sort of flooded the market. And there was a lot of stocking. The automakers, everyone was being extremely aggressive with their projections, and I think people were just buying to ensure they had the security of supply, and that caused a bit of a squeeze. And and listen, I personally didn't think that was a sustainable price that high. I think the sustainable price is certainly a lot higher than where we are today. And what that happens, it creates a glut, and then you need to go through a destocking, and that's what we're seeing now.
We have had some interesting NMA to start the year, and it probably somewhat of a positive that we've seen. So we saw Solaris Resources. They received $130 million from Zijin Mining. Ascena Resources announced their $360 million with Yintai. Other notables would be FPX and Canada Nickel.
Yeah, absolutely. And that's, I think, a trend you're going to see continuing very well. Two of those names we're pretty infinitely familiar with. Ascena, PowerOne's been a backer literally since day one, partnering with Haya Dawn and Alan Friedman there. That was a company whose management team we had originally worked with on Oryx Resources in Namibia that B2 Gold purchased. And once that was done, they found this other Twin Hills project, which is incredible. And, what's interesting, if you look at that, you mentioned the take-out price was in the high 300 millions. Yeah. That's a 3 million ounce deposit, right? It's in a great place, a great team. But why I'm sort of optimistic about the rest of the market is there's a lot of other companies, like a White Gold, for example, 2.1 million ounces. That's not that different than 3 million ounces, where one's trading for high 300 millions, one's trading in the 40 million range. So I think there's a big value gap, and it's just a matter of, people needing to understand and realize, why they should be looking at it today versus tomorrow, and M&A helps to drive some of that. On the Canada Nickel front, what I love about that project is it's basically center ice in Canada for doing this type of mining. They're in Timmins. We're very involved with PowerOne in a company called EB Nickel, and it's a almost exact analog to Canada Nickel. Shares a lot of the attributes in terms of size. There's actually some very incredible metallurgical benefits to have there. It's got, what I think is going to be a very attractive strip ratio. And what you're starting to see is these global players, they think, not like some of the retail investors 5 months out, they're thinking 5 or 50 years out. And these projects like this in, tier one jurisdictions, there's just not many. So I think companies are now looking to get a stakehold where they can. And that's what led to these transactions into companies like Canada Nickel as well.
Let's talk about the outlook, or let's talk about the positives for the nickel price. So you mentioned Canada Nickel, and you mentioned your other company, but nickel prices have certainly been tough right now.
Sure.
And then you also look at what the closures that have happened in Australia with some of their nickel mines. It has been surprising that there has been these investments in a Canada Nickel as well as an FTX. What is the bull case that they're making from these investments, especially for these North American-based companies?
I think there's a couple different factors that come into play here. One is, nickel price is off, over 40%, I think it is. Mm-hmm. A lot of what we've seen there, again, is maybe sort of an early acceleration into the sector. There's also those issues with the LME, right? When they had that short squeeze that drove up the nickel prices. But what I think is going to be the big factor in nickel is the source of the nickel, right? I guess the boogeyman here is the supply coming online from Indonesia. They can flood the market. I don't think you get too many arguments if you sort of were to look at how that nickel there is produced versus how it would be produced in Canada or the United States. So what we've seen is a theme. If you look at the Inflation Reduction Act, the source of the commodities is very important. It needs to come from a place that has certain ESG standards when they're producing it. I think that's where you see somewhere like Timmins be able to meet those criteria, and some of these other places not, right? Mm-hmm. And I think that's, and in evaluating that, once these projects start to come online, they're going to be very highly desirable, and I think that's why some of these majors are looking to position themselves into it now.
I had a question around Chinese investment and kind of worries about national security. So going back a couple of years, there was the TMAC offer that came from a Chinese firm. That was decided that it couldn't go through by the Canadian government, and then Agnico came in. I mentioned before, talking about this M&A, and those are two Chinese firms, so Zijin for Solaris and Asino for Yinte. Is it that, what is the state of that right now? It sounds like Chinese companies can still bid on Canadian companies, or is that kind of a concern, or where does it sit?
I think it depends on the mineral.
Yeah.
Not a lot has changed in the last year or so in terms of what's been able to happen, as far as I'm aware. I'm not an expert in this sector. I think the Yinte Osino is probably, from what I understand, not going to be an issue because it's gold. Gold is not a critical mineral, or listed as a critical mineral, so it doesn't come into the purview of the Competition Act or of the Canadian Review Board. Whereas some of these other lithium, nickel, etc., might be scrutinized further. So I think that's what you have to look at. From a pure availability of capital perspective, it's had a significant impact, right? The Chinese have been a big buyer, and I think we talked about this a little bit last time. With that being removed from the market, what's going to take its place, right? The abundance of resource funds in North America has diminished significantly in the last decade. I think some of these governments are looking to step up. That's maybe what the Investment Reduction Act and what Canada is trying to do. But I don't think it's going to replace that on a one-for-one basis. So it's going to take a lot more capital to be able to replace what the Chinese have been able to provide the market in the last number of years. And listen, strategically, there's a lot of good reasons why the governments might need to be thinking the way they are. But they also have to understand, without capital, the industry is not going to be able to go anywhere. And then they're not going to be able to put themselves into a position of, to be globally competitive in, as a player in the critical minerals supply chain, which is top of mind for everyone. So I think they need to understand what their risks are, what their opportunities are, and have a very wholesome approach to how they want to manage that, but ensure all the essential parts of that equation are being addressed, not just part of it.
Are first-tier jurisdictions still in vogue, still in favor? Because we had a real uptake on that, I'd say, probably about 2 years ago, and then that was a rationale behind the Agnico making itself the number 3 gold miner after the takeout of Yamana. And then you also heard of a lot of the companies saying that they have to invest in Australia, they have to invest in Canada, just because you have the geopolitical advantages up there. But I don't know if that's still carried forward. And I guess kind of adding on to that, like how, if you have apples to apples comparison with a project, and then one might be in a first tier jurisdiction, the other may not. I was just wondering how you would actually kind of value that, or if you can.
Yeah, I've always viewed that as a huge factor when evaluating a project. And I think in this environment, it's never been more important. The world's gone from globalized to now sort of deglobalizing or compartmentalizing itself. With the conflict in the Ukraine and Russia, there's been a number of sanctions, so that's complicated a lot of the investment criteria for many different companies. From our perspective, we have a sort of a risk evaluation matrix that's certainly up there, and it's certainly a very big one. And I think it's wise to look where you're mining, because it doesn't matter how good your deposit is, if it's not going to be mineable or saleable, then what's it actually really worth, right?
Yeah. Let's switch to white gold, where you're CEO. What are you focused on there?
White gold, we had a phenomenal year last year. We increased the size of our global resources to 2.1 million ounces at 2 grams. This is primarily an open pittable deposit in Canada, in a tier 1 jurisdiction like we just touched on. So I think it really checks all the box for what you want to see in a junior gold exploration company. What's also incredibly unique about white gold is just the sheer size of the land package. It's almost 1 million acres. So what we believe we have is a true district. And the thesis that we had when we put the company together is, imagine you can go back in time and really acquire an entire district like Timmins, like the Abitibi, like the Nevada goldfields, and look to explore that as the first people to ever be there. Well, that's what we are doing in the Klondike. And the Klondike, for maybe as people aren't familiar, that was the epicenter of the gold rush in the 125 years. So there's been 20 million ounces of gold found on surface, and there was literally no modern day hard rock exploration done until about 15 years ago when our partner Sean Ryan went there. His thesis was, this gold didn't come from the sky, it must have come from somewhere below. And he put together a very unique protocol for surface exploration. He was able in a very short period of time to make 2 major hard rock gold discoveries. One of them was owned by a company called Kaminak, which was eventually acquired by Goldcorp, now owned by Newmont. And the other one is now held into white gold. And what's really so exciting from our perspective is we've had, Sean and his team and our team work in this area now for several years. We've seen what's led to that success. We've seen what's led to some of our other new high-grade gold discoveries, like the ones on our Betty property last couple of years, where we're hitting, 5 grams over 25 meters, 3.5 grams over 50 meters right from surface. Very, very exciting type discoveries. And to some degree, I feel like we've kind of cracked the code now. And we see, with these indicators, we have similar indicators on a lot of these different areas in our district. And we think that, we're going to be able to continue to make these discoveries literally for, years and decades to come.
Are you funded?
Yeah, we did a financing in December where our major shareholder after the PowerOne group is Agnico Eagle, another incredible mining company. And they've topped up to 19.9%. We also have Kinross Gold as a partner, and we are fully funded now for our 2024 exploration season.
Lastly, what are going to be the milestones over the next 12 months at white gold, David?
So we're getting in the field in the coming month or so, and we're right in the final stages of finalizing our exploration plan. I think this year we're going to hope to have another very impactful exploration program, and what that's going to mean is we're going to look to be identifying new zones of mineralization near our flagship deposit. So that's we just actually released that we identified a very interesting new target close to one of our deposits, and it has a lot of similarities to the gold saddle. So that's really exciting. Like, the best place you want to look for gold and find gold is near existing gold targets. Statistically, that's where you have your best chance. Economically, that's where it makes the most sense. Again, we have this Betty property, which is on the southern end of our package, ties onto the huge coffee deposit to the west. The south, it ties onto the Mammoth Casino Porphyry project. That's like 20 million ounces of gold and 14 billion pounds of copper. So we've had that high-grade discovery I mentioned there. That's only one of 6 targets on that property. It sits right on the Cock Creek Fault. So we're really excited to keep on drilling there. What we've also identified in that area is 2 very interesting copper gold porphyry targets. And this looks quite similar to the Casino deposit in Western Copper. And these porphyries happen in clusters. So this is like true elephant country. It's virgin territory. We've done the work up over the last 5 years. We're ready to start drilling it. And I think that could produce some very exciting results. Like, the Yukon is just so mineralogically well endowed that, the sky is the limit in terms of what we think we're going to be finding there. And we're literally just scratching the surface. So it's a really exciting place to work. It's a great place to work. It's in Canada. It's a couple hours by plane from Vancouver. So it's not, sometimes maybe people think it's remote. It's an incredible place to work, and we're thrilled with the success we've had and really optimistic for what we think lies ahead here.
David D'Onofrio, we're thrilled you're able to kick off PDAC Day 1 here in Toronto.
Yeah, it's a pleasure to be here, and stay tuned. I'm hoping we're up for a very exciting year in the exploration sector.
My name is Michael McRae, here for Kitco Mining.
Kitco Mining special coverage of PDAC 2024 is brought to you by Gold Mining, Uranium Energy Corp, and Uranium Royalty Corp.